Hi, everyone. Welcome to the New York Alternative Investment Roundtable's Lunchtime webinar series premiere. This is an educational webinar that will take place monthly, and recordings of each webinar will be posted on the New York Alt Roundtable's website. If you have any questions throughout the webinar, please put them in the chat, and we will do our best to get to a couple once the content is completed. I would like to thank all of our sponsors who help make everything the Roundtable does possible. My name is Jason Eisman. I'm an assistant vice president and insurance advisor at Hub International. Prior to joining Hub, I spent 7 years working at Morgan Stanley, obtained my Series 7 and Series 66 licenses, and I'm a Kaya charter holder. And now I'd like to introduce Andrew Jones, managing director at Ultimus Leverpoint. Andrew, would you like to share some more information about yourself and Ultimus Leverpoint before we get on with the webinar?
Yeah, no, thank you, Jason. Appreciate that introduction. So Andrew Jones, Managing Director at Ultimus Leverpoint Private Fund Solutions. I've been in the fund administration space for just about 20 years at this point. My background has always been kind of business development related, kind of focused on growth with the firms I've been with. But started out with a smaller firm here in Chicago, and then that business was acquired in 2018 by Ultimus, and have been with Ultimus since then. And so maybe a little bit of background on Ultimus as a firm. So we are, one of the largest, if not the largest, independent fund administrators in the U.S. We provide services to a broad range of funds. I myself am on the private fund services side of our business. That's the area that I've always been in. And so we're focusing on private equity funds, closed-end private funds, and kind of everything from private credit, real estate, venture capital, kind of any closed-end private fund, you name it. Then hybrid funds, which we're seeing more and more hybrid funds out there these days, and and then open-end private funds as well. What commonly just gets referred to as hedge funds. But could be any kind of open-end fund structure, and we tend to see hybrid funds that are both open-ended and closed-ended. But then we also provide services to registered investment funds, so mutual funds, ETFs, and then probably the fastest growing area that we've seen over the last several years is the registered alternative space, with a lot of activity in those vehicles, whether it's interval funds, tender offer funds, BDCs, and the like. And so we continue to see a lot of growth there as well. So pretty broad breadth and depth of services that we're able to provide. And as I mentioned, my role is now, in the past, on kind of the operation side of things in certain aspects, as well as kind of focused on business development. These days, I'm 100% focused on our go-to-market, business development strategies, as specifically as it relates to the private investment fund services.
All right. That is a lot, and that is very interesting stuff. Thank you for sharing that. And now let's
Absolutely.
jump right in. All
Yeah,
right.
let's do it.
So tell me, what's the role of the back office in a private equity firm, and what groups make up the back office?
Yeah. So when we think about back office, it's the operational and compliance backbone of the firm, right? So basically, the back office has to ensure that all of the firm's activities are accurate. We're thinking about things like transparency, compliance. But the primary role of the back office within a firm like that is to support the front office, support the investment teams by really managing the day-to-day operations, things like, not just administration, which, obviously as a fund administrator, that's the area that we really focus on and support our clients in. But also, there are regulatory obligations, things like financial controls. The core groups, if you will, that kind of make up the back office. Obviously, there's accounting. It kind of the main function I think most people probably think about when they think about the back office. Treasury, finance and treasury services, managing things like cash flows, bank reconciliations, overseeing the movement of money within, the investment firm and the underlying funds. You've got your your compliance groups, your legal team, in a lot of cases, and I think we'll talk about throughout our conversation today, where those things tend to be in-house versus outsourced and things like that. And then, investor services is a key part of the back office, and preparing and providing investors with access to information, preparing their investor statements, managing things like capital calls, which I think we'll kind of get more into the core of what services are provided. But those groups, in addition to your IT, right? Because that's kind of a part of your back office as well. Your technology group, your data management people that are bringing all of that information and data together to be able to provide that transparency and reporting. So those those core groups are what I would say make up the back office for a private equity fund.
Okay, you know what? You mentioned a lot of groups, and when I think about a private equity firm, private equity fund, you hit on just about most of what makes up the firm, but it's a large majority, but gets little recognition. So I'm really happy that we're doing this and sharing some light on all these functions that are in the back office and kind of get that back office recognition. So now that we've gone through that, we have an understanding of the back office. Can you explain how do the back offices differ between large private equity firms and small private equity firms?
Yeah, no, it's a good question because I think that there are some significant differences. And when you think about when we think about large and small, those are very relative terms. So what I would say is when we think about large, let's think like 10 billion and above, right? The larger firms that are that have tens of billions of dollars under management, they've got very complex structures for the most part. Firms like that tend to have dedicated teams internally for kind of each of the major functions that we've talked about, right? Accounting, compliance, IT, and so they're also typically going to have invested in either custom or enterprise level technology platforms. So you think about, like, we're an InvestTran shop, so that's our main fund accounting platform. And so that's that's an enterprise level accounting system and platform. To be able to bring that in house and to have that system, there are some significant costs, and there's a lot of customization and build that you have to put in around those systems. But the largest of the large private equity firms tend to have a lot of that stuff in house, and so they handle more of those functions in house and have very robust internal controls, and so that they tend to have a larger staff in house as well. And then they're typically going to be faced with a little bit higher regulatory scrutiny, and so and they'll have more complex fund structures. So that that's when I think of like the larger private equity funds that we tend to see, that's kind of the makeup of what their back office tends to look like. Now, smaller private equity funds, which in relatively speaking can still be quite large as far as assets under management, but those that kind of maybe I categorize in the smaller end group, right? And I think small is probably not the right term, but nonetheless, operating with leaner teams, right? We think about the lean launch. Outsourcing is usually far more common. So they have staff that are covering multiple areas of the back office. So it's not necessarily dedicated teams for each function, but maybe you've got people that have multiple roles, wearing multiple hats. And these are firms that tend to rely more heavily on outsourcing or co-sourcing, which I think we'll talk about more in a minute. Everybody should be doing this, focusing on cloud-based technology platforms. I think we see this with firms that are growing and things like that. Having the scalability within your technology to account for your growth and to have that cost-effective growth is really important. So we definitely see these firms looking to use technology in a lot of different ways. And then they tend to benefit from the fact that they have that agility, right? They're you kind of think of the ocean liner versus the speedboat, right? The ocean liner, it can do a lot of things and it can get a lot of places and it can weather a lot of storms, but it doesn't have the agility of the speedboat. And the smaller firms are just a little bit more agile like that, and you know, they're able to make faster decisions, implement pieces of technology that may make a difference faster. But then they could lack the depth of controls and the specialization that we see with larger firms. So it's really the scale, complexity, and then the resources that a firm has that drive those operational differences.
Okay, that makes a lot of sense. And it's extremely interesting. Uh, one of the differences that you mentioned was that the size of the teams and the dedication to a particular area as opposed to having the kind of multiple hats and the agility. What you mentioned about the boat, the liner and the speedboat.
Yeah,
I like that. I mean, bigger team isn't necessarily better. If you're going to be efficient and effective in a smaller team, you're getting it done. You can scale, cost effective. It works, and it makes a lot of sense for the smaller firm that doesn't have as much AUM. They don't have as much money to put towards the human capital. So that was extremely interesting. You hit on a bunch of other things
yeah,
that I want to
yeah,
talk
no,
about,
yeah,
but
absolutely.
you're getting me excited to talk about the back office. So you mentioned
Rare occurrence.
rare occurrence, but this is what we're doing. We're bringing the back office back,
Yep.
or we're bringing it forward. Can you talk about the prevalence of outsourced and co-sourced back office services and
Yeah.
in-house back office services?
Yeah, no. So I mean, traditionally, a lot of firms did things in-house. You go back, 15, 20 years ago, and most private equity firms were doing their fund administration in-house. Outsourcing has become common now, right? Especially when it comes to fund administration. But also, we're seeing outsourcing for, compliance and, IT outsourcing, cybersecurity outsourcing, enabling firms to really access, specialists that are experts in those areas, getting that advanced technology and the scalable resources that come with outsourcing. So we're seeing that more and more, and it's kind of become commonplace. It allows firms to, continue to grow without, the overhead of building out large in-house teams. That's obviously the big advantage. One of the things that we see, and I think a lot of larger firms face, is you're managing then kind of like an in-house team that can get quite large, and you've got a lot of HR things that can come along with that, and a lot of hiring and things that you're dealing with, the natural turnover that may happen within a team like that. And there's additional headaches and things that come along with that when you outsource, you can really kind of you put that on that outsourced firm that's doing that already as a part of their overall business, and they've got an enterprise level solution for it. So outsourcing is much more prevalent these days, very common. What we're seeing more of is co-sourcing. And co-sourcing is, it's a hybrid model. I think it's important to maybe, kind of explain, at least from my perspective, our perspective, what co-sourcing means, because co-sourcing seems like another one of those relative terms, could mean different things to different people, right? But from our perspective, co-sourcing is really, it comes down to, the fund sponsor, the fund management, owning the main accounting engine, the main technology platforms, having those resources in house, having their own licenses for systems like Investran, and utilizing those systems in house. But then the co-sourcing aspect is bringing in an outsourced provider to work within their environment and provide the services utilizing their systems and their resources. So, this model allows firms to retain control over all of their key data. And but then they get to leverage external partners, and then when they have the need for capacity goes up, they have that ability to leverage that outsourced aspect of the partnership to help with that surge versus needing to come up with those resources internally. So the co-sourcing concept is really growing in popularity. We're seeing more of this. That now the downside to co-sourcing is the cost of those systems. Those systems aren't cheap, and so the firms that we're seeing do this tend to be a little bit larger in size. They're probably, there's a medium category, Jason, that we didn't really kind of talk about. It's probably those firms that are in that range that are looking at the co-sourcing model. Maybe they've already got their accounting platform in-house and they're thinking, it's we've built out this team, we're going to continue to grow. Do we want to bring in a partner now to help with that growth? Maybe we're not ready to fully outsource. Maybe we're not comfortable to make that leap. But co-sourcing is a good way of kind of dipping your toe into the water, if you will, of what's the solution here that a lot of firms are doing this. How can we get into this and start to maybe benefit from some of that opportunity to really allow us to reduce overhead, but continue to have the expansion power that we need to have as we continue to grow. So co-sourcing, I think we're going to hear a lot more about. The fully in-house back office, increasingly rare. Typically only found in the largest of private equity firms these days. They have substantial resources and, as we talked about earlier, they have more complex needs, more regulatory scrutiny. Those firms tend to have already built this out and they've been around and maybe kind of have the foundation and the roots in the ground of many years of doing this, and they've built out that process. And so that cost is kind of built into their model, right, if you will. And so now, having said that, we're seeing where pockets within those firms are looking to do co-sourcing and outsourcing of different things as well. So, key drivers of what makes this decision for a fund, probably first and foremost, investor demand for transparency is going to be the number one thing that drives, are you going to outsource or co-source? And then, other, things like, growth, capacity, demands, operation, scalability, those types of, are all kind of key factors that drive whether a firm's going to outsource or co-source.
Okay, that makes a lot of sense. I mean, it's a really important function, the collective back office. So you want to make sure that what you're doing makes the most sense for you. If you
Yeah.
can't, if you can't build, you can't either for cost or just um, human capital, going back to that, if you can't build that enterprise level system or that software, then you can get that elsewhere. It's better for you. It's going to help you grow. All these things. This makes a lot of sense. It's extremely, extremely important. Something that we touched upon earlier, and I want to come back to, is technology. So, in
Mm-hmm.
the age of technology and the prevalence of AI, how has the technology and AI changed the way the back office looks and the way the back office functions?
Yeah. So I think this is probably, if there's an exciting area of back office right now, I think this is the exciting area. Um, I think like, yeah, everybody knows we're on the verge of how's AI gonna change everything, right? And it's in the news just about every day, and it's a topic at every conference that we're attending. And so between AI and machine learning and automation of processes, we're going to see, I believe, things that are manual kind of tasks, low hanging fruit, reconciliations, data entry type stuff, report generation, that kind of stuff that's going to be automated. And you're going to see AI being involved in those, in those types of things to be able to free up staff to focus on higher value work. I think that's the low hanging fruit that we see where these AI applications can probably be applied to the back office, and in some cases it may already be being applied today. I think that the sky's the limit. I'm not an expert on AI. I'm certainly not an expert in technology, but I think everybody kind of sees the horizon as, boy, there's a lot of things that can happen. And anybody who's using a chat GPT or a perplexity or one of those engines, as a course and part of their work life these days, can see that, boy, the advantages, the way that I can utilize this this application to to do a lot of the thinking and the research for me, and then I can leverage it and I can take it forward. There's a lot of advancements that can take place with that. So, I think AI is going to play a role. I think that it's too early to say exactly what all it's going to do. I don't think that anybody believes AI is going to come in and take over the entire back office. I think there are some people that maybe think that that's a possibility. I don't, I think that there's going to be an aspect and a role for it. And in a lot of ways that's yet to be determined. But certainly, from a technology standpoint, technology in general has really changed the back office and made it more efficient. We talked about cloud-based platforms. The concept of cloud-based platforms is not new, right? But a lot of these main accounting engines, are cloud-based and have only been cloud-based for a number of years, allowing administrators and fund managers to get access and gain access to their APIs. And getting that API access to be able to pull data and information out of these systems and to utilize that across your internal enterprise is really valuable. That's something that we've been heavily focused on. Our technology group has a very, very heavy API strategy. And we're looking to utilize those types of connections anywhere and everywhere that we can to allow for the streamlining of data from one area of our business to another. And so I think that we're going to, that's already taken place. If you're not utilizing that technology, then you're falling behind. You need to be doing that kind of stuff. It gives you, there's better data security that comes with that. You can manage more funds, handle more investors. You're getting 24/7 access and support. Key part of kind of your back office from a technology standpoint. And then as I said, the APIs allow you to start to integrate your systems. And so, we're seeing more and more of our clients looking at data lakes like Snowflake and things like that to bring data from multiple locations together to be able to have, kind of a central hub, if you will, Jason, where you can get all of that information and data in one place. And so that's, I think, from a technology standpoint, that's where we've seen the most leverage of technology in the back office is how do we get the data and information within these different systems that we utilize on a day-to-day basis into one place where everybody then has access to it, and we can slice it and dice it and look at it in different and meaningful ways, and then give our clients access to that data, via dashboards and things like that allow them to gain access to their information without needing to have these systems in-house. I mean, that's where that co-source model starts to kind of be like, oh, do I co-source, or could I outsource, right? Because if you do outsource, the concern there is, well, do I have access then to all of the necessary data that I need? And with where we're headed with AI and technology platforms, the answer is more and more, yes, I still have access to all of that data and information. I can still get to it. And that's, I think, where we're just going to continue to see, an expansion of access to data. Most important than probably around all of this within, as far as technology within your back office, cybersecurity, right? So you've got to have good, strong cybersecurity solutions. You got to protect that sensitive data and be able to handle cybersecurity threats, training, things like that. I think we'll talk more about that, but that's a key area.
Okay, yeah. So that's a lot. I mean, we do live in the information age. So if you don't have access to information and to data, then you're behind the eight ball. So it makes a lot of sense. The use of APIs, I've been seeing a lot of that, where we work with some partners of ours and we build APIs to bring in data that they're keeping on their server and we're able to
Mm-hmm.
utilize that on our end. Um, I'm happy about what you said about AI. Everybody that works in the back office that's listening to this either live or on recording is signed with relief that you said that they are not going to be losing their jobs. Their jobs might be augmented a little bit, but their jobs are protected, at least for the time being. And
Yep.
a nice little plug here, cybersecurity is extremely, extremely important. And with the prevalence of technology and AI, even more so now than it was before. I can tell you, You mentioned hubs. So on the insurance
Yeah.
side,
Yep.
cybersecurity is huge across all industries. Financial services is no different. And again, as we become more and more reliant and technology becomes more and more incorporated into everything that we do, cybersecurity, all risk management is extremely, extremely important.
Yes.
Now, yeah, so we talked about some risks, cybersecurity being one. Can you name a few of the most common operational risks that the back office faces, and how are these operational risks getting mitigated?
Yeah. So I do think we have to double down a little bit on cybersecurity because what just with what you're seeing out there with mimicking or impostering of employees and things like that through bad actors. It's really important that every firm have a strong cybersecurity training module for the employees, and everybody should have multi-factor authentication if they don't already. um, you want a secure and monitored infrastructure, right? So I think it's just really important that everybody, and that's the area where with AI and where we're headed down the road, it's just an area that's going to have more and more scrutiny, and we have to be careful and make sure that we're doing all the right things there. um, Obviously, operational risks, things like that. You got to be in compliance with any of the regulatory authorities that you are subject to, right? So I'm not an expert on compliance services, but certainly that's an area where our clients need to make sure that they're doing everything that they need to do. A risk area would be non-compliance, right? So you want to make sure that you're in compliance with all of those regulatory requirements from a reporting standpoint, and any other kind of reporting that you may have to provide to investors as well. But obviously the key risks when you think about the back office, they're going to come from a data error or a process failure or something like that, where the wrong information got put in here and then wrong information is going out over here. And so looking to reduce those types of things through automation, through strong controls and procedures, is really what's important. Preventing that with standard operating procedures. Every administrator that's out there that's a major player in the space is going to have a SOC 1 type 2 audit completed of their policies and procedures, and that's something that you shouldn't take lightly when and if you're evaluating administrator. And you should really drill down into what's the breadth and depth of that audit. Not all SOC 1s necessarily are created equal. And so knowing that's in place and that you have those controls and procedures to avoid process failures, mistakes are going to happen. The question is, does the mistake get caught as a part of your process of reviewing and checking things? That's what's key and important. And I think as we layer in solutions from the technology side, like automation and AI, that helps mitigate those types of errors and the risk of human error, that focus on where our processes and procedures begins to change a little bit and more into the review aspect of what has the system now done and how do we know that the system's output is truly accurate. So I think that the most important areas you have to focus on from a risk standpoint really involve the processes, the procedures, and make sure that good data in, good data out, right? And if you're focusing on those things, and your vendor risk is also key, but making sure that you partner with the right partners, right? Partner, that you're doing your due diligence on your partners, that you have a clear understanding of who's doing the work. The relationship aspect of those vendor partnerships is really important, and to make sure that and understand what your partners are doing from a vendor partnership standpoint, so that you are mitigating your risks. So I think those are kind of the key things, Jason, that I would say are the operational risks in a back office. I'm sure there's other things that I've missed here, but I think those are kind of the key things that we would say you'd want to make sure you have covered.
Right, and that absolutely makes sense. So we hit on cyber previously, the operational stuff. I mean, it used to be that information was coming in, it would be reviewed a couple times. So that's a kind of a four eyes check. You'd have to layers of signatures from varying um, from one analyst or let's say, and then an officer. So all of these controls, they're not going away with the use of technology. They're really just going to be automated processes. You're going to have some type of technological checks that are going on the back end to ensure that all of these things are still going on because although you're moving from manual work to automated work, the risk still exists and the ramifications are still the same. So it
Yeah,
makes
I think that's right. And look, I think that, right now, I think that's kind of the future. I think that a lot of firms right now are still, there's a lot of human intervention, humans doing the work, right? So we're on the verge of seeing more of that automation. But right now, if you look at most firms today, there's not going to be, they're just getting into that and looking at bringing that in. And some firms maybe they're a little bit further along than others, and vice versa. But it's really important that your controls and procedures are well documented and followed, because that no matter what your solution is utilizing technology, those have to match up with that to be mitigating any risk.
absolutely. So now we've discussed a lot about the back office. We have a good understanding. We understand how it works. We understand what it's comprised of. We understand the risks. Now, how does the back office play a role in a private equity firm's growth? So that could be if it's launching a new fund, if it's looking to onboard new institutional capital. How
Mhm.
exactly does the back office play a role here?
Yeah, so I mean, obviously, one of the most important things for a private equity firm's growth is fundraising, and so, that's more of the role of the front office and the business development aspect and side of things. But the back office is very much involved in that process. So, when you go to launch a new fund, there's a lot of things that are going to go into that whole process, right? The legal aspect of creating those structures, the compliance framework that goes along with that, different things that, just the operational processes to support a new fund launch all have to be thought about and taken into consideration. So the back office is handling the heavy lift and the vast majority of that work. And so, when it comes to new launches, it's not going to get off the ground if you don't have somebody back there putting all of the pieces together. And then from an institutional investor standpoint, a lot of the things that they're going to be concerned about is, well, how are things being calculated? What kind of reporting and detail am I going to get? They may be looking for, ILPA compliant statements and reporting from you. And so that's all then reliant on your back office to be able to provide that data and information and transparency to those investors. So, it goes hand in hand with the process of raising capital and being able to have those conversations about, here's what's great and unique about our strategy and where we're headed and what we can do for you on your capital investment. But then also, how are we going to be reporting back to you? How do you know that you have the transparency into what's going on, what's being invested in, where your capital is being put to work, and then the returns that you're seeing on that. So, the back office is very involved and heavily scrutinized from a due diligence standpoint when it comes to those institutional investors. So I would say it's as valuable as anything in the process of, winning that investment, if you will, from institutional investors. And so, it's a lot about, providing transparency and reporting, and then having a good, robust control environment, that, all the things that we've talked about, institutional investors are going to be looking for to make sure they're there. And so you got to be able to represent and show that they are, and then be able to speak to it intelligently and provide them with that comfort, so that you're in a position where, they can check off the box, so to speak, from their perspective. Yeah, and then that's building investor confidence, right? So the back office, if you have a professional back office, they're building the trust with those institutional investors. So they have, the back office is providing the reporting to the investors on a regular basis, typically on a quarterly basis for a private equity fund, giving them that access via web portals, and answering any inquiries they have as it relates to, their investment in the fund, getting their information, supporting them through providing, the audited financials for the fund at the end of the year, providing them with their tax returns information, K1s going out to them at the end of the at the end of the year. All of that work is being done in the back office, and it's from an investor standpoint, it's their main point of interaction with the fund, and it's where they're going to get their information on how am I doing, how's this doing, how's my how have I put my money to work here. And so that's obviously very key to the growth, because if they're happy with what they're receiving and the transparency they're getting in addition to their investment, then that is going to hopefully reciprocate their next investment into fund 2, fund 3, and help grow the confidence overall in the in the infrastructure that you as a firm have put together. So I think it plays an important role, and it's really all about being able to provide good insight, transparency into the underlying processes that are going on, how the fund is operating, and then again, when we talk about outsourcing, a lot of institutional investors are looking for independence from the fund management itself in doing those calculations, in completing that work, and preparing their partner capital account statements. And so that's where we go back to, we talked about earlier, what are the drivers for outsourcing, co-sourcing? Well, investor demand for transparency and independence is one of the big reasons. We saw that play out over many years on the open-end hedge fund side, and now it's nearly impossible for a hedge fund to operate without a fund administrator. So I think it's very important in the growth of the firm and being able to provide that transparency for investors.
Absolutely. That makes sense. And I like that you tied everything together with what we'd spoken about previously. We spoke about how to determine whether or not the back office functionality should be in-house, outsourced, or
Mhm.
co-sourced. It makes a really big difference because ultimately how that back office operates and functions, the independence we mentioned is a big thing, the ability to provide transparency. You're going to look at the ability to implement internal controls to mitigate operational risks. All of these things
Mhm.
are going to drive investor confidence and ultimately institutional capital, drive future funds. And yeah, this is
Yeah.
a critical role in all aspects of the fund, the firm's life.
Oh, absolutely. And I mean, the one area that I maybe didn't touch on, but is certainly important as well, is the back office being having that regulatory readiness, right? Being able to you know to as you grow your firm, having the capabilities, being ready to perform any of the compliance duties that are required for the firm as it grows. Over time, those things can change as far as reporting requirements and things like that. So being ready and in sync with what's needed there is also important in maintaining that continued success and growth of the firm overall, as well as on a fund by fund basis.
Right, absolutely. The ability to adapt or that agility and the expertise in-house to be able to continuously change what is needed based on the regulatory requirements.
Well, that's
So,
right. Or having the right partner that you've outsourced it to, right?
absolutely.
Yeah.
Absolutely. Your partner is of the utmost importance to the current and future success.
Yep.
So, in your opinion, what's the most misunderstood part of a private equity back office operations? And can you set the record straight about it?
Yeah. It's funny. This it's a good question. I think there's a lot of people that have worked in the back office their whole life that would love to be able to answer this question. Um, but if I were to try to do it justice, I would say that probably the biggest misconception about the back office is that it's just administration. That it's just administrative. Um, Whereas I think in reality, it's a strategic partner. It's a strategic partner in many ways, all the ways that we've talked about: managing the risk, ensuring you're in compliance, providing the data and and data analytics, if you will, that drive investment decisions, right? So I mean, the back office is very involved in all of that. And so there, the transparency that investors are looking for, um, to support those relationships with your investors. All of that is really important. The back office is what's going to drive your efficiency as a firm that helps support your growth. And so when we think about, our role in providing back office services to our client, it's really about building a strategic relationship with our clients that, we're thinking together, we're thinking forward, we're handling, we're doing the day-to-day work, right? That's key. That's extremely important. We have to be providing the quality service up front and providing them with the ongoing support and services that they need. But we're also thinking forward with them. What's coming next? Where are you headed? What's on the horizon for you as a firm as you launch Fund 4 and Fund 5, and as you get into the larger scales and sizes as a firm? How do your needs change? Because they certainly do, and so having that efficiency and that support to help support the overall growth of the firm is really important. And the back office plays a big role in that. And it's probably not, I think when you're looking at launching a fund, you're focusing on, well, how do I raise capital? How do I get investors to come to this? The concept of, how do I then provide reporting and do all of this for them it's just kind of, I think, inherently secondary to some extent, because you don't get the investors if you don't have the right solution, the right product on the front end that they want a part of. So, that's obviously the most important thing for a private equity firm's growth and success. But the back office is not just an administrative function and a necessary evil. It's your partner in actually helping drive that growth into the future, because investor demand for transparency and information and data is never going to go away, and it's only going to grow. And so that back office is your partner in helping you provide that solution to them, because you're only as good as they want to keep coming back, and you want to keep, they want to reinvest, and they want to continue to grow their wealth with you. The back office is extremely key in helping maintain that relationship with your investors. And so a well-run back office, can be your source of a competitive advantage in many cases. And, it can create value versus just being a cost center.
Yeah, and I think that last sentence is really the essence of what the misconception is, if I understood it correctly. The administrative work, yeah, it's viewed as being very administrative, but the value that the back office provides is what's really getting glossed over. The right strategy that's being offered to institutional investors is going to garner interest. But
Mhm.
if I'm a fish and I'm on the hook, you're not going to reel me in if you come and then say, yeah, my back office is not going to provide timely reporting. You're not going to understand where the numbers are coming from. We're not going to give you updates, period. That transparency that's coming from the back office, or we're not going to be compliant with the regulators, that's a red flag. And no matter how good your strategy, how good your perceived returns, there's no trust in the returns that are being provided by you to investors. So it's there. The back office is a strategic partner and provides significant value. And that's what needs to be, that perception is what needs to be altered.
Yeah, I would agree. I mean, it definitely, and look, I think that there are a lot of firms out there that do understand that and do appreciate it. I don't want to throw out
Of course.
the concept, or the idea that it's always undervalued. I think that there are a lot of firms that understand that it's really important. I think they get it. And we're obviously working with a lot of those firms that care about that. So
Of
I
course.
think that it's out there, but I think when you think about it just on a, kind of when you can just think about fund administration or the back office in general, and you don't really bring all this together, you don't think about everything we've talked about here today. People kind of just, I think they inherently go to, well, that's a cost center. It's, we have to do that. It's required, investors need it. But I think that it really should be viewed as a partnership, with, with the overall firm together. It's a very important partner in how you continue to grow. Because everybody's going to say, well, look, we're going to get you all the reporting you need. You're going to get, to an investor, we're going to provide you all of this. But then what do you provide in the end, right? What the proof is always in the process, in the actual delivery in the end. And so that meets their expectations in addition to the investment, side of things meeting their expectations. Well, then you've really created a very good relationship that they're going to want to keep coming back to, and that you're going to continue to see opportunities for growth and expansion with.
Absolutely. That makes sense. So one last question for you.
Yeah.
If you were to talk with an individual or a group that was launching a new PE firm, what would you recommend they focus on when building out their back office?
Yeah. Well, I think first it starts with, you've got to, it depends on if if you're going to outsource or you're going to co-source, whatever you're going to do. When it comes to technology, you got to have scalable technology. I think the best way to get scalable technology obviously is through outsourcing, because it provides scalable technology and scalable resources that go along with utilizing that technology. So, you have to have that as kind of a foundation of your back office and how you're going to support fund one, fund two, fund three as you grow. And when you're just getting off the ground, you're just focused on getting off the ground. You're not thinking about the next fund and where my growth is going to go down the road. But what we find is that firms that don't take those types of things into consideration up front, then they really have to go through this growth pain about a fund or two in, where they really have to then make this decision of, okay, now we've got to make a change in our process. We've got to make a change in our systems so that we can really support this going forward. And I think that what we're seeing with advancements in technology and through outsourcing, is that there are economical ways to get that scalability up front, right? That don't break the bank for a fund day one. And because that's usually the reason why you may not go with the best of the best, right? Well, I'm just getting off the ground. I need to, price is the most important thing. And certainly is important. But it's also important that you have the right systems and the scalability within your solution, your service solution around the back office to be able to support your growth. Otherwise, you're always going to have that headache as you look to continue to grow and have success of, I've got to fix this back here. I've got to fix this back here. So you don't want to have that if you can avoid it. I think that, the other thing is make sure you're doing your due diligence. Again, you're considering outsourcing, co-sourcing, bringing, external experts that have a lot of experience to the table. Make sure you're comparing apples to apples when you're having those discussions with firms. It's very easy for, jargon to get thrown around, and it sounds like this is the same as this. It's really important that you do your due diligence. We recommend and we want to have on-site discussions with anybody that we're considering doing business with to the extent that we can. We'd like to meet in person. We'd like to introduce you to the team. Those types of things I think are extremely valuable to the fund management in evaluating what provider they're going to work with, regardless of what you're outsourcing. Fund administration, compliance, your audit, your tax solution, your cybersecurity and IT solutions. You should be, to the extent that you can, you want to meet with people in person and you want to have those conversations and understand who's okay. You're the expert talking to me right now. Who's going to be on my team when I sign on the dotted line and you go on to the next thing? But I'm working with, John Doe or Jane Doe here. Who am I? Who are those people? Make sure that you have conversations and that you get to the experts that are going to be working on your team, because that's where the difference really, I think, is, and where it lies within and in between firms. So, it's important to focus on all of those things. I think that, again, planning for your growth. I think that's the hardest thing for new launches to maybe wrap their head around, is where is this going to go? And they're just trying to get off the ground. But I think to the extent that you can plan for your growth is really important. And then obviously, you know, regulatory compliance is important things to be considering. So regardless of the size you're going to launch at and things like that, you know, making sure you're with reputable service providers from a legal, tax, audit, administration, but also who's your compliance consultant, and making sure that kind of, well, here's where I'm gonna start. What are my requirements at this phase, and as I grow, how do those requirements change, and knowing all of that kind of in advance, and being ready to make those engagements if you don't need them right now today, making those engagements in the future, just to know how do you plan for your overall growth, and getting this thing off the ground.
Right. So strategic thinking and long-term thinking as opposed to thinking short-term, just, let me get fund one off the ground and then
Right.
I'll worry about fund two, but you're going to run into difficulty with fund two if your back office isn't scalable. So having that
That's right.
scalability is extremely important. And then we hit on know who you're working with because it's going to be extremely impactful on your overall operations, what the capability and knowledge and expertise of that outsourced firm or co-sourced firm. And additionally, again, it's going back to that, but surround yourself with the experts that are going to be thinking proactively in handling certain regulatory inquiries, exams, whatever it might be. You want to be ready for
Yep.
everything and be strategic with every step you take. And it all starts with
Yeah.
the back office.
Yeah, and it can be exhausting, I think, to think about and to go through. But building a strong back office from the outset is going to, it'll be essential for long-term success, and building that investor confidence. That's going to be of the utmost importance long term.
Absolutely. That makes a lot of sense. Um, Andrew, I want to thank you so much for taking the time and sharing some light on the back office. I think
Absolutely.
we
Thank you.
demystified some myths, and we have, at least personally, I have a whole new view on the back office, and I'm better for it.
Well, very good. No, well, thank you, Jason. Appreciate the opportunity to come on, and to speak with you, and thank you to the New York Alternative Roundtable, a great organization that we're a proud sponsor of, and look forward to seeing many of you, hopefully, that are listening here at the next event, and at future events as well. Same, and also look forward to seeing you in person again soon as well, Jason.
I'm looking forward to it.
Very good. Thank
All
you.
right. Thank you, everyone.